This is Bazaar Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Thank God it's Friday. It's a nice, lovely Mumbai morning here this Friday. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. Will the market weather be as obliging is the question, because yesterday it was not. I'm Prashant, with me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, morning. And in weather parlance, right, we're running into rough weather, a little bit on the upside, right? But be that as it may, it's Friday, it's the end of the week. Lots of cues to watch out for. Global cues are stable, a lot of result reactions as well. We have a long day ahead of us.
Well, that's right, guys. And I'm going to have a really, really good weekend. I complete 13 years here at CNBC TV18.
Oh, wow.
It's been a fantastic journey. I thank everyone, who's supported me along the journey. Thank you guys as well. Every morning we wake up to each other. So that's good. And, you have the bulls and the bears. So all the bulls have been positive. Thank you so much. And the bears, you'll have quietly been covering your shorts. I hope there's more short covering in store. But it's been a fantastic journey. So I'm quite excited. And
congratulations, by the way. It's been so amazing, right? I mean, to see your growth till here and to work with you side by side, it's been the best. And to many, many, many more.
Yeah, that's what someone told me 13 years ago that Nigel, you're going to be doing Bazaar 13 years later and you're going to be getting a chance to be, with CNBC TV18 for so long. I would give everything for it. So I'm so happy that these 13 years have passed. I couldn't ask for more.
Here's to many more, Nigel. Congratulations.
Thank you.
Well, let's just quickly take a look at what the setup this morning looks like, because yesterday, as I said, was a little off. And off color, deep red actually, I think is the right description. And that all of that happened after the RBI policy. So that RBI policy turned out to be pivotal. Let's just begin with what you need to know as we begin this new session. There was a sharp sell-off, and the Nifty ended 200 plus points lower on the index, and quite a bit, right? Now, the realization which I think the market got was that the RBI hinting that perhaps there are no rate cuts coming in FY25 until and unless they get to that 4% inflation target. I think so. It was a hawkish hold. You can say, well, there was nothing outwardly hawkish in the policy. There was not, but I think the governor's comments were very clear. They're not in a hurry to cut rates. And I just want to sort of look at what happened overnight as well, because something similar is happening in the US as well. So, for example, as we've been pointing out, many Fed officials have been coming out and saying that there is no hurry to cut. And last night we had one more. This is, Thomas Barkin. He's the regional Fed president. He said that jobs data has been remarkable, and the Fed shouldn't rush on rate cuts. That's the exact quote which came through, right? So that realization that maybe, we are kind of looking at the markets have got it wrong. Maybe we've got it wrong by saying that inflation is just imminently coming off sharply and that rate cuts are just around the corner. I think that's happening in the US, and I think that happened here in India as well. The 10-year, it responded, but not in a significant way. 3 basis points higher, 4.15% is where the 10-year finally ended. The dollar is at about 104, nothing remarkable there. US equities, well, they consolidated at highs. The S&P, for example, just about 0.06% higher. The Nasdaq was up about 0.25%, but these are record highs for the US market. And we are kind of consolidating and holding on there. Oil prices moved up sharply, and this is something that we need to watch. We are now 81 plus actually, 81.5 dollars a barrel. That's a 3% jump. So for a single day, that's large. Now, just to come back and circle back to the levels here, right? The Nifty has closed just under the 20-day moving average at 21,000, just over the 21,691 mark, which is the 20-day moving average. Now, we'll need to see if this holds. The market in January as well started correcting once that 20-day went, and we got a pullback, a short-lived 2-week pullback, and we're right around there once again. And I think that's going to be the decider in that sense. The next level on the downside is the 40-day exponential moving average, which is a little lower at about 21,432 or so. Remember, if you look at the futures and options data, it does show that now FIIs are their short positions, net short positions, and index contracts are the highest it's been, over the last 5 or 6 days at least. We are back at 90,000 plus, 92 or almost 93,000 contracts short. 4 or 5 days back, this number was 92, 93. The day before, it was 80,000 contracts. So there's a significant jump that we've seen. So again, something to kind of watch out for. At an extreme, 120, 130, that starts to indicate that maybe we are close to a bit of a bottom. We're not there yet. It's just increased right now. Now, Bank Nifty, and this is something we've maintained for a while, that it perhaps looks like it's looked weak, and it can retest the low of 21,449. And that's something we'll watch out for. On the way up, the 20-day perhaps will act as a resistance, which is 46,062 at this point. We've had a phenomenal rally, and some pullbacks along the way are par for the course. Will we get that? Will the market pick up pace? Because so far there has been no follow-through. It's been one-day wonders. The market sells off day two, nothing on the downside, no follow-through. Similarly on the way up, and that's why it's been so ranged. This morning, the SGX Nifty, the GIFT Nifty is indicating a 45-point lower start. Sonia.
Oh, absolutely. And the range is well defined, right? As you said, the resistance level is somewhere around the 22,000 mark. And on the downside, the most important level to watch is the 20-day moving average, which is that 21,690 mark. So between 21,700 and 22,100, the market is sort of stuck within that particular range. But global cues are stable. So as we wake up this morning, we saw the US markets were not bad. In fact, the S&P 500 touched that milestone 5,000 mark, which has been quite remarkable. In our own markets, I'm watching out for a couple of things. One is, of course, the move on SBI, right? That stock is up 8% this week. We've seen large delivery-based buying in SBI. Yesterday, there was delivery buying of over 2,200 crores in just one trading session. And also, ICICI Lombard bought 0.4% stake in SBI yesterday. So, this is one space and one stock that will continue to be on our radar. Apart from that, we had strong earnings from the likes of LIC. There was Zomato, where there are multiple upgrades that have come in. In LIC, the value of new business has gone up 46%. In Zomato, I reckon that could continue to see traction this morning, given the kind of strong numbers and brokerages raising their earnings estimates on Zomato. So keep an eye out on that. Lots of results today. There's Hero MotoCorp, there's Tata Power, there's Bandhan Bank. And in fact, Tata Power is the one I'll watch very closely, given the kind of run-up that this stock has seen and the thrust that government has on renewable energy, right? So Tata Power will be in focus. There's also an IPO that opens today, Entero Health. Now, I don't know the kind of demand that this would get, because there are some, problem pockets here. It's a loss-making business. In fact, in FY23, this company reported a loss of 15 crores. So let's see how it goes. But lots of action to track. And I think the market as well could be in a good mood, given that it's Friday. And Friday is always a great mood to begin with. But no, jokes apart, this range that we've seen, 21,690 on the downside and 22,100 on the upside, is something that the market will have to deal with for a while.
Well, that's right. We are in good mood. So hopefully the markets as well are in pretty good mood on a Friday. But yesterday, well, it was a little bit disappointing, because you had a couple of factors that did play out with regard to the Nifty itself. And the reasons that we ended lower, one was the commentary that came in from the RBI was a little bit more hawkish than what the street anticipated. There were the heavyweights in there, ICICI Bank, HDFC Bank and ITC, all of them were under pressure, and they accounted for more than 50% of the losses yesterday. And the Nifty weekly expiry, well, it played out to the bears. Remember the previous two expiries, whether you're looking at the Nifty Bank or the Nifty Financial Services weekly expiry, they played out for the bulls. But yesterday, that wasn't to be the case. What did the FIs do? Well, they added close to around 11,000 short contracts. And that's what takes the short positioning to around 92,000 short contracts on. Just a few sessions ago, it had gone to around 60,000 short contracts. And from them, we've quickly seen it go back to around that 93,000 odd mark. As we've been saying, when it goes to around 100,000 odd, that's where you see a larger short covering bounce that's playing out. So don't get worried. The FIs have done this before. When they keep adding, short positions and they go overboard on that side, that's not such a bad omen for us. Getting to the levels that we're tracking, I was looking at the options data as well. And the 21,500 mark, crucial level on the downside. And you have two key technical levels. Near term, 20 DMA, we managed to defend that yesterday. And otherwise, the 50 DMA comes in there. But I think 21,500, that's the crucial level, which is almost in the middle of both those two. Moving to the Nifty Bank, that's very, very close to the 200 DMA. We have seen in the last couple of weeks, it's gone to the 200 DMA, breached it intraday, but from there you've seen a bit of a bounce. So you don't want this level to get broken down decisively. So those are the levels on the key indices. Stocks I'm watching, Concord. And if you look at the stock yesterday as well, in a weak market, Concord ended high with a gain of more than 2%. And in the last 1 month or so, the street seems to be sniffing something. They're getting quite optimistic out there. We had the numbers which are pretty okay. So that stock has been a relative outperformer, and it's backed with some data. So in an uptrending stock move yesterday, you did see open interest as well was up by close to around 8%. So there is some long build up out there. And delivery yesterday was relatively better. If you compare the delivery yesterday with the previous two sessions, well, it was relatively better at close to around 14 lakh shares on the NSE. So Concord is the stock that I'm looking at. And in terms of levels, I'll lay that out for you guys. Let's get the show started.
Oh, yes. In fact, on the equity side, we have commentary coming in from Chris Wood of Jefferies, who says that the budget has caused Mahesh Nandurkar to increase further his investment in L&T in the portfolio. He says greed and fear already has a 6% weighting in L&T in the India long-only portfolio and a 5% position in the Asia ex-Japan long-only portfolio. Meanwhile, he adds, it has been an ongoing feature of Modi's government that the fiscal deficits have been used mainly to finance infrastructure investments rather than transfer payments. Chris adds the other point about the budget is that the government, as regards the disinvestment privatization agenda, signaled that the focus will be on value creation in public sector companies. In his view, this is a reason for investors to pay more attention to a cheaper part of the Indian market, namely state-owned enterprises.
All right, we'll get you some money market views now. V. Lakshmanan, a federal bank, says that higher than anticipated U.S. jobs and hawkish Fed commentary took the dollar index to a 2-month high, fueled by a rise in U.S. yields. He says the USD INR traded relatively stable post the budget, and he expects the rupee to trade range bound in a range of between 82.8 to 83.2 in the next few sessions.
Right, and on the bonds, Lakshmanan says the Indian government bond yields traded marginally higher after the MPC kept the repo rate and stance unchanged for the 6th straight meeting, as inflation remained above the RBI's 4% medium-term target and economic growth continued to be resilient. He says the market continues to trade with a positive bias on the back of FPI flows and lower gross borrowings target in the budget. He adds the coming sessions could see the 10-year benchmark bond yield trade in a range of 7 to 7.15%.
Well, a lot of stocks to track for you in our special top 10 segment. We'll get to that in a bit. For the time being, we run you through the list. Grasim, LIC, United Breweries, Global Health, JK Lakshmi Cement, and Aarti Industries. All of them will be reacting to positive news flow. On the flip side, Biocon, Torrent Power, RVNL, and Ramco Cements will be reacting to negative news flow.
Okay, well, that's basically what's coming up here in just a bit. Adrian Mowat is with us, investor at Hong Kong SAR. Adrian, great to have you with us here. Thanks very much. In the RBI meeting yesterday, we heard very clearly from the governor that maybe nothing imminent in terms of rate cuts or anything. So, in a way, markets realizing that they could be on hold for much longer than what everyone thought. In the US as well, that is the sense that some are starting to develop. That although we've heard from Fed officials themselves that, rate cuts are going to come, etc., but the recent string of very strong data forces one to think that maybe it's going to be much later. Your thoughts, Adrian?
Yes, I think, remember, there's always been a bit of a disconnect in terms of the rate cuts implied by the futures market versus the dots that the Fed uses in their forecasts. So this idea of 3 rate cuts as the Fed official view has been in place for a while. Now, moving on to the economic data, it has been incredibly strong, particularly the labor market data remains very robust. And so I think this is going to be a theme of 2024, that the market in terms of futures market, perhaps some of the bears on economic growth are overly optimistic on rate cuts. And that feeds through into other robust economies like the Indian economy. Your economy is strong. There's no need for the RBI to be reducing rates in order to stimulate economic activity. And I think if the story is one of a stronger dollar because the rate expectations in the market are having to be adjusted in favor of dollar yields versus other countries, then there's probably a message for the RBI that cutting rates may generate a slightly weaker rupee, and perhaps that's not what they want.
So what does one do from an investor standpoint? It's been a phenomenal year, right? The last 12 months for the Indian markets. You think we can replicate that in the next 12 months? And what's the best way to be positioned here in India?
I think it's very unlikely you're going to replicate the returns that were achieved in 2023. And there is an issue with the market, is it doesn't seem to be broadening. You talked earlier in this segment about the Nifty Bank Index. where it's sort of testing its 200-day moving average. If you hadn't had the news with SBI potentially selling part of its stake in Yes Bank, we probably would have gone below that 200-day moving average. So you've got some strength in the PSU banks, but broad weakness in the very large private sector banks, large in terms of their index free float. In the budget was broadly a good budget, forecasting a slightly more modest fiscal deficit. It all looked incredibly prudent, as it should do after such strong economic growth and good income from tax receipts, even though relatively poor receipts from divestments. So that doesn't really provide much stimulus. Yes, there's CapEx numbers look good, but I think that's also partly reflected in stocks like Larsen and Toubro, some of the cement stocks. So at the moment, I feel India is very much in a sort of consolidation phase. And we might be waiting until we get the end of the fiscal year results for the major Indian index names before you get a catalyst that gives you direction.
All right. Hi, Adrian. Good to see you in. Adrian, Indian markets are looking up. Earnings are looking good. Political stability, everything's working for us. But we're trading at more than 20 times. China, if you want to call them a peer to us, they are available at less than half that valuation. Everything's good at a price, or China is not good at any price as of now?
Well, you want to be in a market, in an economy where you've got strong nominal GDP growth, because ultimately that will decide the level of aggregate earnings and revenue growth. And the problem in China, you saw the CPI numbers again this month confirming deflation. Nominal GDP growth in China is less than it is in the United States and is significantly less than it is in India. So yes, there is value in China, and there are some opportunities, particularly where companies are returning cash to shareholders. But the broad market is a tough one because you just don't have that strong nominal growth that gives you the overall growth that you need in revenue and earnings to justify taking the emerging market risk.
All right, we leave it at that, Adrian. Thanks a lot for stopping by and speaking to us. Have a great weekend. We'll see you again soon. Let's slip into a quick break. On the other side, our list of top 10 stocks is lined up with our entire research team. Stay with us. All right, let's kick it off with some stocks that are in the news this morning. Our entire research team is joining in. First up, Grasim is in focus. Nigel, how did it look?
Well, the Grasim, we look at the standalone numbers, are pretty much in line. On the top line, they came in at around 6,400 crores approximately. The EBITDA number came in at close to around 520 crores with margins of around 8.2%. So that was a little bit higher on a year-on-year basis and a little bit lower on a sequential basis, but that's par for the course. The EBIT margins is what we look at on a segmental basis. And the VSF business, well, the margins look much better on a year-on-year basis. So on a sequential basis, they came down a tad bit. And the chemicals business, well, that looked quite good on a quarter-to-quarter basis. There was some improvement out there. So those are pretty much in line. The problem with the margins and why there was some compression on a quarter-to-quarter basis is because of the others, headline, which in fact houses the paints business, which is now going to get commission. So these numbers looked in line. They've given their outlook in terms of capex as well, and they're saying that commercial production is very soon with regard to the paints division. So I think I'll go with mild green out there.
Okay, mild green on Grasim, but the good set of numbers came in from LIC, and that, of course, stock has been on a tear. Yash is joining in to give us the latest on that. Yash, morning.
Well, morning, Sonia. It's literally LIC singing Apna Time Aayega through its third quarter results. Super set of numbers. As far as, AP, VNB and VNB margin is concerned, all three progressed on a year-on-year basis. And they beat the street estimates, which were already very aggressive. So AP grew by about 7% on a year-on-year basis. It came in at about 13,163 crore rupees. The street estimated 13,056 crore rupees. Value of new business margin, that expanded by about 46% on a year-on-year basis. came at about 2634 crore rupees. The street was estimating just about 1879 crore rupees. Value of new business margin, that expanded very strongly. That was up by about 541 basis points in the quarter, came at about 20.01% versus 14.6%, the street estimating 15.7% out of LIC. With that, LIC has become the first insurer to actually see margin expansion in the third quarter.
Okay, so LIC has been, of course, a big mover, and we'll watch that this morning as well. Yash, thanks very much for that. Biocon is the next one we were focused on. Ekta has got details here. Ekta, morning.
Thanks for that. Well, the numbers came out post-markets yesterday and it didn't look too bad. It was largely in line. So revenue was up around 34%. Street was anticipating 26% growth. Margins were in line. So margins came in at 23% in line with estimates. Profit was better than estimates. Now, the biosimilar business was integrated in for most geographies this quarter. So it was expected to be a good quarter. So the biosimilars business was up 65% year on year. Generics was weak. So it was down 7% year on year. And they've also prepaid $200 million towards debt reduction. So all of these parameters, while they did look good for the company, the CFO has resigned. They have indicated to move on and for personal reasons. And there was also resignation from the global head of commercial APIs. So maybe that's probably going to weigh on the stock more vis-a-vis the earnings. They do have a call at 9 a.m. today. So I think more details then.
Okay, thanks a lot for that. Well, it's Friday, so can't not talk about United Breweries. Mangalam is here to tell us how that one looked. Mangalam, over to you.
Well, let's talk beers then. Decent numbers coming in from United Breweries. I call them decent because, there's gradual improvement. Not the best, but there are signs of improvement. 13% growth in the company's revenue. EBITDA, of course, jumps 89% on a very, very low base. Gross margins have improved to 44%. This compares with 42%. And as a result of which, the company's posted net profits of 86 crores. So volumes for the quarter up 8%. So if you look at the trend, there has been sequential improvement over the last few quarters. That's a positive. The premium end is doing well. 14% volume growth out there as well. Just a few things we need to watch out for. Quarter on quarter, EBITDA is down around 200 basis points. So let's see whether they go back to the double-digit margins as well. Fourth quarter is seasonally strong, so that would give an aided push. And finally, they have an important change in the leadership as well. Anand Kripalu, who was the ex-leader at United Spirits, has actually joined as the chairman of the board. So all these factors, I expect the stock to be in mild green today.
Okay, all right, Mangalam, thanks a lot for that. Well, let's go across to Vivek. He's here to tell us about Torrent Power and RVNL. Vivek?
Well, good morning. That's right. So slightly subdued quarter as far as Torrent Power is concerned. Now, it's been a muted Q3 miss against expectations, and on a year-on-year basis, optically, numbers do look quite weak. However, what we have to keep in mind is that the base quarter actually saw two gains. Number one, LNG trading gains had come in last time, and also merchant power prices last time around was a lot better. So the company says that a 543 crore EBITDA is what the excess contribution was last year. This time around, what's actually worked for the company? Higher capacity as far as the additions were concerned, and along with that, higher wind PLF is something that aided the company. Revenues down a little over 1%, EBITDA down almost 28%, and margins too on a year-on-year basis has contracted quite significantly. Profitability on the back of that is down 46%. Sudhir Mehta has decided to move on, from the director of the company. He will continue as the chairman emeritus. The next stock on the radar is RVNL. Now, RVNL, like we've been maintaining, the margin erosion continues, slightly weak execution, so I expect the stock to be in the red today. Revenues down 6.5%, EBITDA down almost 10% on a year-on-year basis. Margins 5.3% this quarter, on a year-on-year basis, 5.5%. And when you're comparing it to last quarter, 6.1%. So, the margin erosion story continues, so I expect some softness as far as RVNL is concerned.
All right, Vivek, thanks very much for that. So RVNL in focus now. Global health is the next one. Ekta is here with details. Ekta, morning. Morning again, I should say. Sorry.
Thanks for that. Well, popularly known as popularly known as Medanta. Revenue up around 20-odd%. Margins have expanded 25% versus 23%, and the profit has grown handsomely as well. Occupancy has risen on a year-on-year basis, 64% versus 59%, and the average revenue per occupied bed is up 4% on a year-on-year basis as well. And the international patient revenue is up around 6% on a year-on-year basis. Expect the stock to probably be in the green today.
Okay, all right. Thanks a lot for that, Ekta. Well, I'm tracking two cement companies. So let's start off with the bigger one first. That's Ramco Cements. I think the stock could start off a little bit in the red, because if you look at it, the street as well was positioned for these numbers to be a little bit weakish. The problem was on the volumes front itself, there was a small miss. That's what led to a revenue miss. And the EBITDA number as well did come in a little bit lower. So it's a top-down miss. Remember, in the past quarter, you had some unseasonal rains that impacted them. And demand in East India as well has been a little bit subdued. The EBITDA per ton for them did come in at close to around 1,000 rupees approximately. Now, we're looking at it. The other point that came out with regard to Ramco's numbers is that they also announced new capacity addition. The estimated cost is around 1,250 crores odd. So that's another stock, another data point that we'll be tracking. So I think weakish numbers with some capacity addition, more capex and debt as well, close to around 5,000 crores. Expect the stock to be under some pressure, but interesting to see what happens from there. JK Lakshmi Cement, the numbers look quite good. There was some mild growth on the top line, 2% growth on volumes, but the EBITDA number looked quite good. And the margins did expand to around 16% approximately. The company has gone ahead and they've announced a capacity expansion as well from around 14 million tons. In the next few years, they're saying they're going to be going to 30 million tons. So because of that, they've added both the announced clinker as well as cement capacity addition. Expect the stock to open up in the green.
All right. Well, let's also talk about Aarti Industries and how that one could shape up. Sonal is here to give us a lowdown. Sonal, over to you.
Good morning, Sonia. Well, it was another quarter of sequential growth that the company saw. YOY, it was a decline as we are seeing across the chemical space. So YOY revenues are up 4%, but EBITDA is down 7%. Margins have declined 200 basis points and profits are down 9.5%. But what the street could like is there is a sequential growth and a good one at that, because revenues are up 20%, EBITDA is up 15% on a sequential basis, and profits are up 36%. On the back of that, there could be some green, but we are, of course, awaiting management commentary as well.
All right. Well, here's a quick recap of our top stocks with positive news flow. There's Grasim, LIC, United Breweries, Global Health, JK Lakshmi Cement and Aarti Industries. While stocks with negative news flow, there's Biocon, Torrent Power, RVNL and Ramco Cements. But let's focus on Paytm. I mean, that refuses to move out of the news. Sources have told CNBC-TV18 that Paytm Payments Bank Board is thinning out. Ritu joins in with more details on all that's been shaping up so far. Ritu, morning.
Good morning, Sonia. Ever since these issues came to light, that there were compliance issues, that, there were regulatory lapses, the spotlight very much has been on the board of Paytm Payment Bank, with several independent, board members and, about 3 members that are from 197 Communications, chaired by Vijay Shekhar Sharma. And now we've been given to understand that in the light of RBI's crackdown on the bank, at least one board member has submitted her resignation, and that is Manju Agarwal, who is a State Bank of India veteran banker. She's been with SBI for 34 years and had been serving on the Paytm Payment Bank board since, May of 2021. But we've been given to understand that effective the 1st of February, that is the day after RBI imposed restrictions on Paytm Payment Bank, Manju Agarwal submitted her resignation as an independent director on the board of the bank. Now, the reason we understand is because of, this RBI action affecting her position on boards of other companies that she sits on, and therefore she decided to move on from there. This is the first resignation that has come in the light of RBI's actions. We'll have to see if there are any others. Just to quickly point out, it's a 9-member board, and it includes Bhavesh Gupta and Surinder Chawla, who are from, of course, the company, and, a compliance person, Srinivas, who also sits on the board. Besides this, the independent directors include the likes of Pankaj Vaish, Arvind Kumar Jain, Manju Agarwal, who is now quit, Shinjini Kumar, former City, and Ramesh Abhishek, who is the former secretary of DPIIT.
All right. Thanks very much, Ritu, for that. So keep an eye out on that one. Yesterday, reversed some of the gains from the previous 2 days and ended about 10% lower. We'll take a quick commercial break here. We have Pradeep Kheruka, chairman at Borosil Renewables, joining in. On the other side, we'll talk about the third quarter performance, some fundraising coming as well. Stay with us.
Welcome back. Well, it's time for our first corporate introduction. Borosil Renewables, so that's a stock on our radar for quarter 3. The company's revenue as well as EBITDA surge. but the margins did contract. Also, the company will raise close to around 500 crore rupees via a rights issue. Mr. Pradeep Kheruka, the chairman at Borosil Renewables, joins us on the show. Hi, Mr. Kheruka. Good morning and always good to see you in. Give us a couple of numbers, sir. The problem for me is the margins. Have they bottomed out as of now? Will they start improving from here on? And in your India operations, if you could tell us, what is the current utilization levels and how do you expect this revenue run rate per quarter to scale up?
So the margins have been very low in the last few months. I would expect that we should imagine that these have bottomed out. We are running at about 94% of installed capacity, which is a lot. Within 12 months of having started up our third furnace, normally people expect to ramp up at a much slower rate. We've been able to ramp up very, very rapidly. We are looking forward to a situation where we would be achieving greater economies of scale and other economies and production costs, also in productivity. We've been able to convert our product range into the new products which have been launched by the market. And so we are working hard on that. So therefore, we might have bottomed out, I might say. Having said that, yes, I'm sorry?
Yes, sir. Please go ahead.
Yeah. Having said that, the world at this moment is probably at its most bottom from the standpoint of competition from China, both in India and abroad. So we find that the Chinese prices are impossible in the sense that you cannot make modules at the price at which they're selling it. So clearly there's a huge amount of support from their government in subsidies. I think, yes?
Yeah, Mr. Kheruka, but when you say that things are at the bottom, good morning, Prashant here, something has got to change, right, to catalyze that bottom and then, lead to prices on the other side. What will that be, in your opinion?
I think recognition by governments in India and in Europe that what we are seeing today is a predatory pricing on an unprecedented level. This is not competition by any stretch of imagination. This is predatory pricing, pure and simple. So if this is addressed by the governments, then I believe that it would be on the way up.
Okay. Sir, good morning. I just wanted to understand a little more about the business. You had started with a market share, domestic market share of close to 20% in 2023. Can you tell us what is the market share right now? How have things changed in the last 1 year? And what is the guidance over the next 12 to 18 months?
See, in the last 1 year, modules continue to be made in India, primarily for export. And so the demand for glass continues to remain very robust until other companies came into the market, which was sometime in the middle of this year. We didn't see much glass coming in from other Indian suppliers. Now we're seeing glass coming in from other Indian suppliers. I would say that market share remains unchanged. In any case, so far as our ability to sell glass is concerned, there's absolutely there's no problem at all. We have a lot of demand, and we have more demand than what we can supply, frankly speaking. The problem is the prices,
when you say market share remains unchanged, what is the absolute exact market share right now, and what is your expectation?
To be honest with you, I don't have it off the top of my head. The exact percentage of market share, primarily because as far as we are concerned, we have no dearth of orders, and we won't for some time to come. So it's that, of course, what has happened is that orders abroad have dropped because main markets were Europe and Turkey. And in Europe, we find that module manufacturing has slumped hugely. And Turkey has been facing the problem of inflation and very high interest rates. So even they are under stress in terms of manufacturing. So whatever we were exporting, we have been able to shift to India without any difficulty at all.
Okay. All right. Mr. Kheruka, final question then before we let you go. Since margins have bottomed out, where do they head to? Do you think in the next couple of quarters you can get back to mid-teens? You were doing 20% just a few quarters ago. And also you could possibly look at raising some money, some equity. Could you tell us for what?
The primary reason that we are looking at raising money is to retire debt. We are very debt averse, frankly speaking. And we'd rather be safe than sorry. And the idea of doing it is that once we have more equity in the business, we have more strength to deal with whatever the future has in store for us.
Mr. Kheruka, very briefly, do you believe, there's no way to know, but do you believe that we will see government action in the near future on the dumping bit?
I cannot see where else India will go, because the way that the government has been leading the charge in Atmanirbharta, which is something that I support greatly, the surrendering energy security to China would be a colossal mistake.
Okay, you were going to give us a number, sir, on the margins. Do you think it can go back to mid-teens? And since you're looking at raising money to retire debt, what is the current debt in books?
The current debt is about 538 crores, including the debt that we have used for the company abroad. So we are working there as well. So we want German banks to fund us over there. So yeah, 538 crores, it's not a lot by any stretch of imagination.
All right, we will let you go on that note. Thanks a lot for joining us. Appreciate your time here on CNBC-TV18. That's the chairman at Borosil Renewables, talking to us about their business. They're looking to raise 500 crores as well. And they also talk about how their domestic market share continues to be stable around that 20% mark. They also say margins have bottomed out. But let's talk about the markets now. It's clearly in a range with 22,000 and 22,100 being a bit of a resistance for the market on the upside. Anuj is joining in now for a quick trade setup. Anuj, how are you feeling about the market? PSUs have come back in a big way, SBI at a record high. But other than that, this market seems to be stuck in a bit of a range.
Absolutely, Sonia. And the close yesterday was quite bad. Now, you may want to blame it on policy, though I do not. I don't think there was anything in the policy to bring the market down. But maybe the market needed an excuse to correct, and that's what the market latched on to yesterday. Anyway, it's the first time that the Nifty has closed near the lows in February. I think that price action itself is slightly disappointing. So in that sense, today will be a test of the market's texture. If yesterday was an aberration, or has the market ended the near-term uptrend? The larger uptrend is still intact as long as the Nifty is holding above the series low of 21,429. But in the near term, it's possible that there could be some volatility, especially at a time when the bank Nifty and the large banks are doing what they're doing. I mean, this is just the problem point for the market, the whole private sector bank universe. And they don't need to rally, but at least need to stop falling. Stock like HDFC Bank, for example, is now down 18% this year and is close to a 52-week low. Even yesterday, it ended at day's low. And even previous day when the market was up, it ended at day's low. So that's been the problem. And that also explains the 5,000 crore FI selling that you're seeing. It's in the large banks, right? Now, coming to Nifty levels, the first support would be 21,665 to 21,688, which is where yesterday's low and 20 DMR placed. And the bigger support, of course, after that comes in at 21,429 to 21,448, the series lows. The first resistance on the upside after the bit of a downtake would be 21,768, the 10-day exponential moving average. And then, of course, 22,000, which has been the problem point for market for last few days. On the bank Nifty, of course, it really absolutely remains the weakest component. That it reminds you of that show, right? The weak link. The only trade which is working in bank Nifty is to sell the failure of rally. The level-based trade is not working. Let's see if it finds any kind of reversal or support, because till the time bank Nifty at least stops falling, it's tough to see Nifty, at least getting past the 22,000 mark.
All right, Anuj, thank you very much for that. So important levels and the overall setup as we begin another trading session this Friday. We'll take a quick commercial break here. We'll come back. We'll be joined by Sudarshan Sukhani and Shrikant Chauhan, and we discuss a specific trade on the other side. Stay with us. Welcome back. You got the pre-open coming up very quickly on us. 12 minutes to go for that. The question is that the markets lacked follow-through on the way down and way up, as we've been saying. Mostly it's been one-day price action, firm, but then nothing else on day two. So will we see something similar today as well? And what's the trade setup? Sudarshan is with us, and so is Shrikant Chauhan of Kotak Securities. Morning, gentlemen. Great to have both of you here. Sudarshan, let's begin with you. What's your sense?
Well, my sense is that the Nifty has now entered into a trading range. That's normal. Markets rally, then they enter into a range and then decide what to do. Now, till it makes a decision of whether it wants to go down or go up, the trade becomes very difficult because we are in the middle of that range and there's really no direction now. Earlier, it was clear that we are in an uptrend, we are moving up, but once we enter a range, that becomes unclear. So for today, the trade is the lower end of the range is somewhere around 21,600. If the Nifty comes towards that level, we can anticipate that maybe support will hold and we can go and take a long position. And this should also be intraday. So that's the only intraday trade that's available. Buy on a dip towards support and then hope for the best. Otherwise, ideally inside a range, we don't trade. Now, the Bank Nifty is a different story. Yesterday, I had pointed out that the Bank Nifty is in a tight range. If it breaks on the upside, there is a buying opportunity. That's how we go up completely wrong when we have a bias. The Bank Nifty broke on the downside. And that tells us that the range has broken down. The market trend for the Bank Nifty is clearly on the lower end. So either you go short on rallies or you do nothing. But there's nothing to buy in the banks.
All right, there's nothing to buy in the banks. Got it. Shrikant Chauhan is also with us. Shrikant, hi, good morning. How are you feeling about the market now? It's been, all over the place, but largely stuck in a tight range. What is the expectation for today? And also take us through your stocks.
Good morning, Sonia. Good morning, Prashant. Yeah, I think, yes, the market is in the range. It is not crossing the level of 22,000. It is finding support close to 21,700, 600 levels. And based on option statistics also, close to 21,600, the market is having excellent support. Ideal strategy should be to look for adding positions between 21,650 to 21,600 because we are expecting market to remain in a range. And again, the market can revisit to the levels of 21,900. So advisable is to buy between 21,650 and keep a stop loss at 21,500. For the Bank Nifty, there also we feel that, yes, it has broken the level of 45,000. But the next level to watch out for would be 44,500. And most of the private banks have now again fallen to their important support levels. PSU banks are in the momentum, so there we can expect further more activity. So broadly, we are of the view that 44,500 should act as major support, and from there we can see some reversal in the market. But if we go through with stock-specific activity, then in that we like State Bank of India. The reason is because yesterday's volumes were much, much higher than the average highest volumes. It was close to doubled. So based on its technical formation, as the stock is into all-time highs and it is still far away from its next resistance level of 750, I think at current levels around 700, it's a buy with a stop loss at 685, and we can keep target of 750. We also like BHEL, which is currently around 230, 231. From here, the stock can move to the levels of 245. So BHEL looks good to buy at current levels. And from the pharma space, we like Wockhardt Pharma, which is around 460, 465. From here, the stock can move to the levels of 500, and we can keep stop loss for Wockhardt Pharma at 450.
Okay, all right. Thanks a lot for that, Shrikant. Sudarshan, what about you?
Well, Ambuja Cement is a buying opportunity, a stop under 550. There is a sustained uptrend. IDFC First Bank is now in a clear and concise downtrend. That's an intraday short with a stop of 83. Similarly, Asian Paints has been falling day after day after day. That's an intraday short again with a stop above 29.75. And I have a positional trade which is also intraday, also positional. That's PI Industries, where perhaps the downtrend is coming to an end. Buy with a stop under 33.40.
Okay, all right. Thanks a lot for that. Well, let's do one thing. Let's thank our technical guests and move on to Siddharth Khemka, the head retail research at Motilal Oswal, who joins in. Siddharth, hi, good morning, and thanks for joining us on the show. I want to start with SBI, which is clearly the stock of the week, right? An 8% rally this week, large delivery-based buying, sitting at a record high. Do you think there's more headroom on the upside?
Yeah, Sonia, good morning. Good to be on the show early morning. So I think, see, if you see overall results, the banking sector have kind of continued to deliver, but there has been some concerns with regards to the NIM compression. The larger concerns for the banks has been the growth in the deposits. Luckily for SBI, these concerns have not been that bad. Then the NIM compression is not that high compared to some of the private peers. Even on the deposits growth has been pretty strong. And to back it all, the valuation seems to be pretty comfortable. The market kind of continues to like the overall PSU packs. And if you see the overall results that have come so far in terms of the interim numbers, again, within the banking space, we have seen that the NIMs of PSU banks have stood resilient, with several of them reporting sequential expansion in terms of margins, while private banks continue to see the NIMs pressure. So I feel within PSUs, SBI continues to do well. We definitely have a very positive view on SBI, and we feel there is still room for further upside, as well as re-rating. Both put together puts SBI in a very sweet spot. We have a very positive view with a buy rating and a target price of 800.
Okay, all right. Hi, Sid. Morning. Good to see you in. Sid, what about Zomato? You know, yesterday the numbers looked pretty good. The stock did pop up, but then it did see some bit of selling, though they're still continuing to, guide that Blinkit turns around in the first quarter of next fiscal.
Yeah, Nigel, good morning. So I think pretty good set of numbers from Zomato. Finally, the quarter came in where they turned around on EBITDA level and started reporting a positive EBITDA. Overall, strong beat across street expectations as well as our expectations. Revenue growth of 15% sequentially, almost 70% growth Y-on-Y, and just see the beat of almost 60% beat in terms of the revenue growth, and largely driven by the non-food where Blinkit was pretty strong. On the EBITDA level, it turned positive, reported a margins of 1.6% against a negative 1.7% previous. So sequentially, we've seen the first quarter of EBITDA profit, and we believe that the company should now report healthy EBITDA for FY24 as well as FY25. So FY25, we are expecting EBITDA margins of 4.5%, which should lead to a net profit of about 360 crores for this year, but a massive 1,000 odd crores, 950,000 crores of net profit for FY25. So we believe that the long-term growth story for Zomato is pretty strong. We do not expect much of competition, which could intensify in the near term, despite the entry of ONDC in the space. We believe Zomato would continue to be the market leader. We have upgraded our target price to 170 from 150 earlier, and we see another 18-20% upside in the stock based on the current results.
All right, Siddharth, stay with us. We'll take a quick commercial break here. We'll come back and focus on the market pre-open. But as we do that, just want to say that we're excited to announce that CNBC-TV18 is back with the second season of India's largest campaign on gender parity. Join us for the mega launch of the event. HSBC presents CNBC-TV18's Future Female Forward, the women's collective with top leaders, influencers, policymakers and trailblazers all under one roof to chart a path towards bridging the gender gap. This is live from Delhi on Saturday, 10th of February, 5 p.m. onwards, only on CNBC-TV18.
Welcome back. You're watching us live from CNBC-TV18's Motilal Oswal studio. We're talking about all the stocks that you need to watch out for today. Sudarshan is joining us first up this morning to tell us about some of the other results that you could be looking at. Sudarshan, what do you have on your list?
Yes, I have a list of few stocks which might react to their earnings. First, I'll talk about the stocks which might react positively. First one is Newland. Revenue has risen 46%. EBITDA has doubled and margin is up more than 1,000 bips year on year. Next one is Honeywell Auto. Profit is up 21%. Operating profit has risen 23% and margin is up 220 bips year on year. Next one is HCC. It has reported EBITDA of rupees 239 crore against EBITDA loss of rupees 134 crore year on year. Next, coming to stocks which might react negatively. First one is AstraZeneca. Profit slips 46% and EBITDA is down 56% year on year. Margin is down more than 1,000 bips year on year. Last one is SKF. Profit is up 13% while EBITDA is down 6% and margin has slipped 130 bips year on year.
All right, interesting list there and important to highlight them. So Sudarshan, thanks for doing that. So that's more earnings coming through. I think the pre-open is with us, so maybe we can just look at what the open, the prices are at this point before we go any further. The Nifty is at about, what, 50 points higher, by the way, and the sensex is starting 400 points or so. That's the rate coming through. You know, maybe just a few names, right, on the back of earnings. Look at what Escorts is doing. Escorts, of course, cut their guidance, and generally there is pressure. I think the stocks are starting about 1% higher or so, 29.65. Mahindra and Mahindra, maybe, the other one to look at, I mean, on the back of what Escorts has done. So keep an eye out on these names. They're showing some green, but we'll see how it goes. Siddharth, any thoughts, Escorts, after the numbers and, of course, what they've said about the guidance?
Yeah, so Prashant, if you look at Escorts, the volume numbers were already seen, which were, we saw the tractor numbers a bit weak. But Q3 numbers were clearly below our estimates. The recovery in tractor margin was lower and a weak tractor demand. Volume was down 7% in the third quarter. So while the company again has lowered the expectation, they expect a 6 to 7% volume decline for the overall tractor industry for FY24, and also highlighted that Q1 could be weak if the elections are announced during that set period. So not much buying could happen. So I think it's a very cautious stance right now. For the next 2 to 3 years, the volume growth for overall tractor business could be a very low single digit, and also because of the high base of the last FY23, and because of which we could see a slower growth. Valuations are at high. Market seems to be a bit positive because of the change in management with the Kubota taking over the Escorts, and that is why a little bit of premium. But apart from that, don't see much positivity from the numbers, so we'll remain on sidelines. M&M could be a preferred pick because of the other businesses that they have apart from the tractors, so the SUVs which are picking up well for them, and that is why we could see a better pick in M&M compared to an Escorts.
Okay, and Escorts has cut their guidance, as we told you. FY24 industry guidance has been cut to minus 6 to 7%. More on that in a bit. But in the meantime, I also wanted your thoughts on some of the large caps coming out with numbers today. There's Hero MotoCorp, there's Tata Power, and Tata Power has been at a fresh high for a while now, 52-week high. You like any of these names ahead of their numbers, Siddharth?
Yeah, Sonia, I think within the autos pack, we have been very positive on the two-wheeler space. Hero MotoCorp will come out with results. We expect a very strong quarter in Q3 because of the festive season as well as the wedding season in the November, December. So overall, we are expecting total volumes growth, which was already declared is about 18% volume growth. Realization should be steady, which should lead to a revenue growth of 20%. Margins are seeing a sharp improvement on a Y&Y basis, and hence we are expecting a strong PAT growth of 46% for the third quarter. And we remain positive with a buy rating on Hero Moto. We believe two-wheeler space could continue to do well within the overall auto pack, and within that also Hero is our preferred pick.
Right. Well, thanks a lot for that, Siddharth. Have a great day, a good weekend. We have just a couple of minutes to go before the markets open for the day. Looks like it's going to be a decent opening, a flat opening actually, around the 21,700 mark. What stands out is Hero MotoCorp is up almost 0.8%, comes out with its earnings later in the evening. So ahead of that, it's looking good. And on the downside, something like Titan, HUL, Infosys, just a little bit of profit taking is what you're seeing over there. Well, Balrampur Chini posted a good performance in Q3. Their volumes surged, their realizations improved, while margins also surged over 100 basis points. Pramod Patwari, the Chief Financial Officer at Balrampur Chini, joins us now to talk about that. Mr. Patwari, good morning and thanks for joining in. Good numbers this time around. So can you tell us, it was a revenue growth of 25% that you clocked in, but it's also a seasonal business. So what can we expect in Q4 and, for the full year FY24, what's your guidance on the top line?
Good morning, Sonia. As you are aware of the fact that last 2 years were bad for the Balrampur with respect to cane availability, that got improved in the sugar season 22-23. So on the back of that, we registered a volume growth, and the ethanol expansion which took off in December 22. There also our distilleries ran with full capacity in the quarter gone by. So that is the result of this higher revenue growth. As far as FY24 is concerned, I think recently there was some rationalization by the government of India with respect to ethanol production. So maybe ethanol production will be lower in the quarter coming by, but sugar volumes, as far as sugar volumes are concerned, these are guided by the monthly release quota. So January and February release are already in the public domain. So we are expecting a better revenue. We are expecting a revenue growth of maybe around 10 to 11% in comparison to FY23 for the full year FY23.
Okay, so 10 to 11% top line growth is what you're looking at. You spoke about ethanol briefly. I just wanted to understand a little more about that. What is the margins that you're looking at in the distillery business? And also, what is your target for the next cycle?
As for the distillery business, we would always recommend that it is a function of transfer pricing of molasses as well as the juice syrup cost. Recently, the UP government has increased the SAP by 20 rupees. So that will also result in higher transfer price of juice from sugar to distillery. We always recommend that profitability should always be evaluated at the company level and on an annual basis. So we are expecting a better profitability this year in comparison to last year on account of higher feedstock available to us.
Mr. Patwari, hi, morning, Prashant here. Good to have you with us on CNBC-TV18 as always. Just a quick point on that SAP increase. I think we've spoken earlier as well with Mr. Saraugi as well. So I think it's slightly more than what what analysts, etc., were expecting. What will this do on the profitability side, if you can quantify that for us?
Good morning, Prashant. Yes, you are right. We all were expecting this to be in the region of around 15 rupees per quintal only. And against that, it has come at 20 rupees per quintal. So this 20 rupees will again add to the cost. But as far as financial year 24 is concerned, we sell around 30 to 35% of current year's production only, and the rest gets carried away in the form of inventory. So the full impact of this will be maybe 1/3 in the current year and 2/3 will be absorbed through inventory valuation.
And what will that impact be, if you can tell us?
So 2 rupees,
on profitability?
20 rupees a kg means if you are assuming a average recovery of say around 11.5%, maybe 1 rupee 80 paisa per kg increase in the cost of production.
All right, and the current price of sugars. The cost of production, sir, will be compensated because the sugar price itself will be relatively higher as well. So is the sugar price higher than the cost of production that's gone up? It'll offset each other, right?
Yeah, correct, Nigel. This will offset. And in addition to that, for Balrampur, we are expecting a cane increase of around 10% further. So even if you leave aside the increase in the realization, the volume will take care of this increase in the 20 rupees cost.
Are you able
we are also expecting a better recovery in comparison to last year. So volume growth, better recovery will take care of this 20 rupees increase in SAP.
Okay, you're emphasizing more on volumes taking care of this rather than, but at the margin price also compensates for this. But where are prices at now, sir? And because this is also, we'll get into the general election season, and sugar is a very politically sensitive commodity. So just wanted to get your thoughts.
Currently, the prices in East UP is around 38 rupees per kg. And for the price trajectory, I think we need to consider the expected production. The consensus as of now looks like India is going to have a minimum of 31.5 million ton as a net production after taking into consideration 1.7 million ton of diversion towards ethanol. Against this, the domestic annual consumption is around 28.5 to 28.7 million ton. We began the year with 5.55 million ton of inventory. So if this number comes to true, then we would be adding around another 3 million ton to the inventory. So inventory of 5.5 million ton will go to around 8.5 million ton. In our view, 5 to 5.1 is the ideal level of inventory. So maybe at some point in time, government might take into consideration whether they can give additional diversion towards ethanol in the ongoing sugar season itself.
All right, we'll leave it at that. Thank you so much for joining us and giving us a quick take. That's Balrampur Chini. But let's get to individual stocks now. Zomato continues to be on our radar. Mangalam is here with more. Mangalam.
Well, Zomato, yesterday the results came towards the dying hours of trade. The management commentary was extremely positive. They upped their overall growth expectations in the medium term from 40% to 50%. On food delivery, they said, the gross order value for food delivery will continue upwards of 20% with margin expansion. And they reiterated their EBITDA positive guidance for Blinkit before the first quarter of FY25 itself. And, they gave us some more details as well. 70% of the Blinkit stores are already contribution margin positive, and of which 20% give you more than 5% contribution margins. So those were strong internals, and brokerages as a result of which have been very enthused as well. Bernstein, for instance, have given an outperform call. They've raised their target to 180 rupees per share, and they're saying that the company has raised the bar again with medium-term growth expectations of 50%. Jefferies, too, has the highest target price on the street, 205 rupees. They've raised their EBITDA expectations by 4 to 10% over the next 2 years as well. The most interesting note, however, came in from Nomura this morning. They have a target of 180 rupees. They've ascribed a multiple of 50 times FY26 EV to EBITDA to Zomato. And what they say is that this multiple, which is a 25% premium to DMart, Trent and Titan, is justified given the growth prospects of the company.
All right, thanks a lot for that. So that's Zomato on the upside, but on the downside, do watch out for names like Escorts. Now, the company yesterday posted its numbers, scaled down, cut its guidance for FY24 because of weakness in the tractor industry. Hence, you could see some pressure on Escorts as well as perhaps on M&M, which is in the same business. The FY24 industry guidance has been cut to minus 6 to 7% versus the 3% growth that they were forecasting earlier. Two key reasons for that. One is erratic monsoon and the second is a soft Rabi sowing trends. They also say that the commercial segment tractors, the demand has been slowing down for a while and hence they have, gone ahead and cut the guidance. Now, a lot of brokerages are cautious on the stock. BofA Securities has cut their target price to 2450, which is a big downside compared to the current market price at 2900. And Incred has a reduced rating on the stock. They have a target price of 2071. I'll also watch out for M&M. I think in pre-opening, M&M is under a bit of pressure because, Escorts cutting guidance would be reflective. Even M&M has a low single-digit growth guidance for the sector.
Yeah, no, I think both same industry and kind of follow the same sort of market trajectory as well. So we'll see. But the pre-open session is is already ended, and maybe just take a quick look at where the stocks are before we go any further. There's about 6 seconds to go, 5 seconds counting down to the market open. I think it's going to be a higher start, and then we'll pick up really in a full flow. So the first rates are on your screen. The sensex is flat. Actually, there's some red. 21,726 is where the nifty is at, quickly coming off into the red. Nothing large. 14 points, 10 points. So is there going to be follow through today, unlike what we've seen over the last so many days? That's the question. Or is it going to be a middling kind of session and the market moves right back up? The Nifty, the Bank Nifty is down about 50 points. So 13 points lower on the Nifty, Bank Nifty down about 50 points to begin the first rates. But more with Sonia on the wall. Sonia.
Well, thanks for that. So I'm going to start, since you spoke about the Bank Nifty, I'm going to start straight with SBI, which is the stock that was at a record high for the last few days. Let's take a look at SBI. There's some more gains being piled on there. As we were telling you, there was large delivery-based buying of over 2,200 crores in SBI. Tata Power next up. It's at a 52-week high and it's in focus today ahead of its earnings that come out later in the day. So keep an eye out on that. Talking about earnings, Hero MotoCorp expected to have a very strong set of numbers this time around. And ahead of earnings, Hero MotoCorp is up almost about 0.5%. Let's look at some result reactions. LIC is clearly your stock of the day, of the moment actually. 5.5% higher, post a very strong set of numbers. The total APE for LIC is up 7%. That's annual premium equivalent. But also the value of the new business for LIC is up 46%. Moving on to Zomato, there you have it. Brokerages have upgraded the numbers post the earnings and hence Zomato is up 3.5%. Apart from that, Escorts, let's take a look at how that one's performing. 4% knockdown on Escorts after the company has cut guidance for the industry to a negative growth. They're expecting the industry to fall in FY24 by the end because of weakness in the sector. BHEL is the other one that I'm looking at. The company has bagged orders worth 5,500 crores from Haryana Power Generation Corporation. Some more numbers and earnings reaction. JK Lakshmi Cement, EBITDA per ton has risen to almost 1,027 versus 690 earlier. So very good set of numbers. And as you can see, the stock is reflective of that, 6.5% higher. Some other corporate news. Biocon is down 1% after the CFO Indranil Sen has resigned. The generics business is under pressure as well. United Breweries is up 3.5% after good EBITDA growth. Margins at 8%, so doubled compared to what we've seen last year. And Aarti Industries, EBITDA is up by 15%. Revenue has risen 20% quarter on quarter. So all in all, you'd have to say that the market, the Nifty, just flatlining right now. Little bit of pressure on the Nifty bank, down about 90%. But otherwise, it's all stock-specific action. Back to you.
All right. Well, the Nifty is gone, I think, and just about to breach the 20 DME mark as we speak. In terms of other stocks that are moving around, you have Ramco Cements. Well, those numbers were a little bit of a miss on the EBITDA front. They've also announced capex. They're already sitting on a debt of around 5,000 crores. So put all those factors together, the stock is down close to around 8%, though the street was anticipating a weakish set of numbers. You have Torrent Power as well, that's down close to around 5.5%. And PFC and REC, both of them taking it on the chin now. Both of them down between 3 to around 4% as we speak. What's doing well? It's time for a beer. United Breweries still holding with gains of around 2.5% as we speak. But the markets quickly have swung from a positive 30-40 points to a negative 45 points as we speak.
Well, more like it, I would say, but let's just see if it holds or if it kind of, goes into a flattish kind of terrain again. This is early days. So, Zomato is a top volume traded gainer across the board. So this is up 3.5% at 149 plus. LIC comes up with another 4%. This is just not LIC. Look at LIC, New India Assurance, both are up 4% a pop. And I think GICRE maybe will not participate because the numbers were pretty poor. From GICRE, and I think there's a downgrade from GIC as well from Avendus, Park Avendus. So they've brought their rating and target down to about $400 after the run-up we've seen. Yes Bank, that big star over the last 4 or 5 days, 2.5 higher, big volumes. Olectra, the bus maker, the electric bus maker, 5% higher on that one, just under 2,000 rupees on Olectra. JP Power has been doing well for the last, for a while actually. It's up 24-25% in the month of February itself. So that's done very well. It's up 60% this year already. And I think JP Power found a mention on Nimesh's D Street chatter list yesterday as well. JK Lakshmi, I think Nigel mentioned, 7% higher. It's a big pop, 976. Parag Milk is up 5%. Coming up with, numbers were strong and they came while markets were trading yesterday. 264 on Parag Milk. Schneider is up 15%. Schneider is, rallying to about 634. And there is Orchid Pharma, which is up 10%. Stocks at about 970 as we get the first trades right now. Shilpa Medicare, another one, 2% higher. Another name which was on the D Street list a couple of days back. Newland Laboratories is up 5%. I think we did mention that earlier. So it's once again, nothing on the Nifty with a 25-point cut, but it's a vibrant start as far as individual stocks, etc. go. Paytm is down 5%. It's after yesterday's 10% pop, 420. REC and PFC, I think, are cooling off a little bit. And as Sonia mentioned, Escorts, of course, is the big cut. Is down about 6% now. The cash price is down 6%, and I think futures are down maybe a little bit more right now. AstraZeneca, I'm not sure if there are numbers or something, but 13% down on AstraZeneca. Stocks at about 5,700. So, more movers as we go along. But Manish Santalia is with us now. He's CIO in MK Investment Managers. Manish, good to have you with us here. Thanks very much for your time. Just a quick assessment of earnings so far, Manish, for the third quarter. More downgrades than upgrades, more upgrades than downgrades, or, it's pretty much in line and nothing much. What's your sense?
Prashant, I think the numbers have come bang in line. Broadly, you see the sectors that have led the earnings growth is your banks, your automobiles, and oil and gas. Now, apart from this, I think broadly FY25 and FY26 numbers FY25 would broadly see a 1 to 2% cut, FY26 would be broadly in line with what the preview numbers were like. So I think there's not too much of a disappointment. Of course, on the private sector banks, it's very difficult to understand the level of derating that this space is undergoing. And that's probably a drag on the overall Nifty as well, the Nifty 50 and the sensex. But, individual sectors, I don't think too much of a downgrade in any of the major sectoral earnings post the earnings season. It was the fag end of the earnings season now.
Okay, well, no major downgrades coming in. By the way, early signs of some profit taking in the PSU space. I don't know if this is actually going to take place, but look at names like IRDA, down almost about 5% odd. You have oil marketing companies down about 2.5%. Very, very early signs of, some money being taken off the table in this space. Something like an NHPC, etc., down almost 1.5–2%. Manish, thanks for joining in. I wanted your thoughts on, the PSU banks particularly, because, SBI sitting at a fresh record high. So, from a portfolio standpoint, how do you look at it now? What's the best way to approach it?
I think there's some deep value in the public sector banks, and now that the valuations of the private sector banks also seem to be correcting quite a bit, I would believe that once liquidity conditions ease out, you would have a better handle on the cost of funds as far as the PSU banking space is also concerned. Of course, one has to deal with tier 1 capital because most of them would be coming in to raise capital. So PSU banks where there is a scope of growth without having to dilute, would be the ones that would be more suited. Those who have already raised the capital, they would be the ones to really look out. And those who have a stable liability franchise, that is the CASA ratio. So guys who are having actually good CASA ratios and a decent handle on cost of funds would be the ones to go. But I think the preferred bet would be the PSU banks, because you really don't know when the private sector banks derating would stop. I mean, it's just mind-boggling as to earnings growth, coming about, but the valuation derating just happens every day. So from that point of view, I think margin of safety still appears to be in the PSU banking space.
Okay, all right. Hi, Manish. Good morning. Since we're talking about PSU as well as private banks, let's talk about the insurance companies as well. Suddenly, those companies have made a good comeback, including LIC. Your view on that space?
Well, LIC was quite undervalued, and they reported some blockbuster numbers as well. And the entire PSU bank as a whole, and the LIC and the insurance companies as a whole, whether it be the health insurance companies or the life insurance companies, underperforming for quite some time as a pack due to multiple reasons, due to higher provisions on account of claims or combined ratio actually not coming in line with expectations. But now that is behind us. There has been some increase in tariffs as well, and I think the growth would broadly come about for the entire space. And within that peak, the PSU ones were the really hated names, so to speak, and offered deep value. I think that is now correcting, and that is what we are seeing in the marketplace.
Manish, so just I know you don't want to talk about individual stocks, right? But I have to just get your thought process. One is Paytm. There was a large kind of a setback which the company suffered. As an institutional money manager, what do you do? I mean, if you own it, do you write it out? Yeah.
So I'll give you a generic answer on this. See, platformized business are the way to go. Now, whether it be the food technology space or whether it be the financial services space, so on and so forth, there's non-linearity that's going to happen across the board. Ed tech, beauty tech, or consumer tech, and so on. So platformized business, there's no major problem. But I think regulatory, checks and balances would need to be adhered to. And of course, that is an area where individual investors would really have to do their research as to the companies which are actually adhering to the regulatory issues, or whether there has been some breach, etc. But otherwise, I think platformized businesses will have non-linearity going forward.
Okay. any place or any space that you would be cautious of right now? Because, you know, this market has defied all forms of wisdom, right, over the last couple of years. Everything that didn't work for the last 10 years is working now, whether it's defense, whether it's PSUs, whether it's railway stocks. So is there any place that you're cautious on right now where you feel like, okay, you know, if you've made money here, perhaps the time has come to, you know, take money off the table?
India is in a bullish phase. You know, all sectors and individual stocks would likely do well, but you got to find value. I mean, it's not growth at any price. You know, that really won't work. So I think what the markets are really telling you is that some of the spaces exhibited growth, but because of the nature and texture of some of these companies, you know, public or public sector or thereabouts, they were quite an ignored lot. And now that's correct. So I think one of the spaces where there's still some disappointment, and primarily post the budget, was that the FRBM got enhanced to 5.2%. Of course, there was little money in the liquidity side. So the consumer staple space, I mean, we thought that before the elections, there would be some relief in the hands of consumers. But I guess that would have to wait post the election results and, once the final budget comes through. But I think the infrastructure spending side, I mean, we are all gung-ho on that side, but one has to find value, where there is value vis-a-vis the price that is being exhibited on the screen.
Okay, all right. Manish, we'll leave it at that. Thanks a lot for joining in. Appreciate your time here. That's Manish Santalia of MK Investment Managers. But let's talk about Manappuram Finance now. Their Q3 net interest margins have surged to a 10-quarter high. The company has a solid non-gold portfolio and is also diversifying into the non-gold space. Their asset quality, though, has deteriorated. VP Nandakumar, the MD and CEO of the company, joins us now to talk about that. Mr. Nandakumar, thank you for being with us on the channel. Always good speaking to you. I want to first start by asking you about the net interest margins, which have been quite strong this time. It's the highest that we've seen in the last 10 quarters. But the company is also diversifying away from the gold portfolio gradually. So tell us a little bit about what the margin performance could look like. Can you build on to these levels further? And over the next 12 to 18 months, what are we looking at?
So we hope the margins could be maintained because we are short-term lenders, even though we lend for 1 year. The usual nature of the customers is to avail for 2-3 months. The average life is around 3 months. And the average ticket in gold loan also remains around 50,000. So we hope to maintain the net interest margin at this level.
Okay, so you hope to maintain your net interest margin at this level. The reason I asked is because RBI has tightened norms, right, across the board for consumer lending, etc. Do you think that would in any way affect your margins?
No, we are falling within our norms. Our board is always conscious about to work within the norm, and board take a decision based on that only, always.
Mr. Nandakumar, hi, good morning. Prashant here. So, could you talk to us about, the gold loan book, where on a quarter-on-quarter basis, growth was kind of flat. This despite the fact that gold prices went up, 5% plus in the quarter. Usually we see a bump up in the advances as well. Will we see that in the coming quarters? What happened?
So year on year, if you take the gold loan has grown around 11%. Quarter to quarter flat because some seasons it used to be like that. Gold demand used to be seasonal. And gold price has not much relevance, even though it is. But it will not affect beyond a certain point because the requirement for money is more important because these people will have to redeem and they used to redeem. In the ordinary course of business, around more than 95%, 96%. Gets redeemed in the usual course. So that means, within 3 months, they have to find out the cash flow. So they are very conscious about borrowing a higher sum based on the price. So it may not have much impact.
Okay, all right. Hi, good morning, Mr. Nandakumar. When you joined us the last time, you told us the ideal mix will be 50% each, gold as well as non-gold. You're almost there. It's come down to around 51.5% approximately. What about growth for the year? I think on gold, you were guiding for around 7 to 8%. And on the overall book, you were guiding for around 20% for FY24. Hold on to that?
Yeah, we hold on to that. We expect a reasonable growth during the last quarter. We used to get our last quarter always used to be good for gold one.
Got it. All right. So just one more question, before we get back to your operational performance. There have been some rumors that possibly, there could be some bit of a buyout news on Manappuram Finance. You want to clarify on that? Is it on the block? Is there anyone who you're talking to?
No, it is absolutely nonsense. It is completely a false news.
Got it, sir. We need to clear out everything for our viewers. So that's why I just needed to ask you on that front as well.
Thank you.
And thank you for that clarification as well. I just want to understand a little more of what's happening in the rural and semi-urban market, Mr. Nandakumar, because, certain pockets like farm equipment, for example, that entire agri segment has been under a lot of pressure. I'm sure there's some spillover impact into your industry as well. Do you think that there could be some more pain before things improve?
Our finance to farm equipments is low. Our car loan portfolio, commercial vehicle portfolio, these are doing well. We have only a very small portion of these farm equipments. And that for us, that did not pose any much challenge in the asset quality.
No, that was just an example that I was giving you, that some of these rural industries are under pressure, but you're saying that you're not seeing any pain as a lender in rural or semi-urban markets?
We don't see any unusual pressure there. Maybe because our portfolio is low and we are very cautious about that.
I think, Mr. Nangor, you're also saying that the cost of funds perhaps will inch up a little bit more, right, in the fourth quarter. But we heard from the RBI yesterday. I think there is a general realization that system interest rates perhaps will stay at these levels for longer. So no real cut or anything soon. So what's your assessment for the fourth quarter in terms of cost of funds and beyond?
The RBI's projection of inflation for next year is 90 bps lower. So I hope that may be an indication that the rates may not go up and gradually the rates may come down. And our expectation about the borrowing rate going up maybe around 10-15% at the maximum. But being small ticket short-term lenders, it may not be difficult for us to pass on in the event of a need.
You mean 10-15 basis points, Mr. Nandakumar?
Maybe in the last quarter. That is the maximum expectation, if at all it happens. But yesterday's CNBC meeting used a lot of comfort because the rates are kept stable there. But at the same time, the projection of inflation for FY25 is 90 bps lower. That means the indication may be the rates cooling down.
Got it. All right. Mr. Nandakumar, the Ashirvad MFI IPO that's been put in abeyance by SEBI. Could you tell us what is the update out there and when can we expect this IPO to hit the markets?
We expect that it is our expectation to take it by mid-March or early April.
By mid-March or early April. Okay. That's so there has been progress that has been made there. Got it. Thanks for that clarification. Finally, any kind of growth outlook that you would have? I mean, for FY25, what are we staring at in terms of growth for the company?
So our expectation always remains about at a consolidated level at around 18 to 20%. And we hold that.
Okay, 18 to 20%. And in non-gold portfolio, what could the growth be?
Non-gold may be higher. Maybe we expect around 30% growth.
Okay, 30% growth in non-gold and overall 18 to 20% growth is what you're looking at. All right. Mr. Nandakumar, we'll leave it at that. Thank you so much for joining us and speaking to CNBC-TV18. Well, let's take a quick break on that note. The market is picking up actually. The Nifty is now up 60 points And led by a lot of individual stocks, Zomato is piling on the gains as we speak, 5% higher almost on Zomato. And from the frontliners, Reliance is doing a lot of the heavy lifting this morning. Let's take a quick break. On the other side, Sunita Reddy, the managing director of Apollo Hospitals, will join in to talk about their Q3 performance. Stay tuned.
Welcome back. Well, the markets have moved into the green. We're up close to around 30 points approximately. And it's good to see that the Nifty bank is trying to fight its way back. So it's up close to around 200 points approximately, which is good news. Cummins had opened up in the red. That stock is moving to the green. So that's one of the bigger movers this morning. Earlier today, we had highlighted that on Concord, there is fresh long addition out there. And this fair bit of delivery-based buying. Yesterday as well, the stock was an outperformer. Today as well, it's up close to around 1.5%. So keep an eye out on that name. On the losing end, NBCC is giving up a goodish bit. Now, that's down close to around 6%, and it's falling on large volumes. So pull up NBCC. That stock should come up for you on the screen. IOC as well is down close to around 4%. Some of these OMCs, after the big run, they are seeing some bit of selling. And I think PFC and REC, both of them seeing a lot of selling now. Both of them down between 5 to around 7% as we speak. And the volumes on both those two are quite large. So keep an eye out on both those two. Honeywell, that's another stock that's opened up in the green, I think, reacting to its numbers. And AstraZeneca is a stock that's down, I think, close to around 10%. That's in reaction to its numbers as well. So that stock is well lower as we speak. But Concord, that's another name that we were highlighting in there. That's up close to around 1% yet again.
All right. That's the overall picture. We are up 20 points on the Nifty. So again, once again, no follow through, right? I mean, on the way down or on the way up, and we are in a range that's been very clear. Apollo Hospitals' third quarter earnings came in line with what the market was expecting. Margins are stable. Hospital revenues have surged, while EBIT losses have narrowed for Apollo Health Co. Sunita Reddy is managing director at the company. She's joining us right now to take some questions. Ma'am, great to have you with us here on CNBC-TV18. Good morning. Prashant this side.
Good morning. Nice to be here.
I want to start good to have you, ma'am. Just a first question on Apollo Health Co. Could you give us the numbers for this quarter? And Apollo 24/7 as well. What was the performance on the operating side?
So Apollo Health Co did really well. We had a revenue of 2,087 crores, a growth of 17%. The vertical, which is the back-end pharmacy, did really well with 1,824 crores of revenue and a growth of 17%. Apollo Online did a revenue of 225 crores and again a growth of 27%. So there was strong online growth. We had 48,000 transactions per day happening and 2 million new users, taking the user base to 31 million. And in terms of EBITDA margin, offline had an EBITDA margin of 135 crores and online a loss of 132, but actually an EBITDA of 16 crores minus the ESOP charges, of which we took away 14 crores of ESOP charges, so net 2 crores of EBITDA.
All right. Hi, good morning, Ms. Reddy, and good to see you in. Nigel on this side. Couple of questions on Apollo Health Co itself. The GMV that you were guiding for earlier was around 2,800, 2,900 crores. Is that on track? And also on Apollo 24/7. For the last 18 months or so, we have been quizzing you. Is that fundraise, on the cards? You have a timeline out there?
We have, let me say there's no pressure. GMV came in at 658 crores. So we are actually ahead of guidance. And the fact that we broke even a quarter ahead of guidance, there is no pressure on cash flows. But we do have, like I said earlier, we have people interested in investing in Apollo Health Co. And at the appropriate time, of course, we'll come to the board and to our investors with the complete plan.
So anything in this calendar year that you're looking at?
This calendar year, Well, there's a possibility, but like I said, at the appropriate time. But the most important thing to remember is that we're ahead of guidance and there's no pressure on cash flows, especially because we are now EBITDA neutral.
I think the reason my colleague was asking you about the margins is because if you track your overall margin picture, right, there is some amount of pressure that you're facing at about 12.9%. You used to enjoy 16, 17% margins as well. This could possibly be because of the cost pressures that you're seeing from Apollo 24/7. Do you get a sense that there could be some, pressure on margins because of that in the coming quarters? And if yes, what is the band that you're looking at?
No, so there will not be any cost pressure on the margins because as you've seen from the performance, we've actually rationalized cost to a huge extent. We've reduced discount, rationalized marketing cost and HR cost. So I think they have reached a very solid, they have reached steady state in terms of cost. There was a margin pressure on the hospital healthcare services this quarter, 94 basis points difference. And this is because, we've actually hired we've taken on doctors at guarantee money, which is a cost of 100 crores.
Okay. Ma'am, just sorry, one last question on the Apollo 24/7, the digital platform. So you've been investing heavily, right, in the business over the last many years. If you could just guide us to when is the final break-even? I mean, for example, last year, the FY23, the annual, there was a loss of about 650 crores. By when will we see a break-even for this business, ma'am?
And in 6 quarters, you'll see a complete break-even. You'll see profits.
6
and we're
quarters?
on track to deliver. Yes.
That'll be Q1 of...
Q1 of
Q1 of
next year.
FY26.
Yes.
Or Q2. Okay, the first half of FY26, basically.
Yes. The first quarter of FY26. First half of FY26.
Got that.
All right, Ms. Reddy, you also had done some acquisitions, 250-bed hospital, I think, in Pune, and a couple of others. How are they ramping up?
They are ramping up, so we're ready to open in FY25, 220 beds in Pune, 220 beds in Kolkata, and these will be ready. In addition to that, we're also looking at, we're looking at Gachibowli. So in FY25, we will open about 500 beds.
Oh, okay, got it. Also, I want to understand for the diagnostic business, right? What is the expectation as we move along? I mean, that business has been in an industry which has been seeing so much competition. Just trying to understand, is the worst over in terms of pricing pressure there, and what is the expectation over the next couple of quarters?
So the diagnostic business grew by 19%. Total revenue there of 111 crores, with AHLL revenues at 333 crores. And margins improved 10% in net margin for the diagnostic business. I think this has huge potential. And as Apollo is growing, as a network is growing larger, I think, there is the ability to become maybe the number 3 player in the diagnostic space. Margins will improve, especially because we're doing, we have invested into specialty diagnostics. So with this, we should get far better margins in the next year.
Okay. So can you tell me in this quarter, in Q3, was it EBITDA positive? You said margins have improved, but I think last quarter EBITDA was about 32 crores. What has it been in this quarter?
So for the diagnostic business, we had 10% EBITDA margin.
Okay. And when do you plan to hit the top line of 500 crore revenue for this business?
We closed this quarter at 111. So close to, I think next quarter we should be close to 500 crores.
Next quarter you'll be at 500 crores, you said?
Yeah, for the total year.
For FY24?
Yeah.
Okay. All right, Ms. Reddy, we'll leave it at that. Thanks a lot for joining in and giving us your thoughts on the business as well as the way forward for the company. Well, let's move on. Asian Paints aims to become a 1 lakh crore revenue company in the next decade. These are the words coming in from company's MD and CEO Amit Singhal in a CNBC-TV18 exclusive conversation with my colleague Mangalam Malu. Mr. Singhal spoke about their growth outlook and opportunities in the home decor space. Listen in.
Last few years, we've really embarked in terms of giving the whole area of paint and coatings a very, very different kind of a zone, because we have started to kind of really look at saying that can we be part of the consumer decor life cycle.
You have waterproofing. What exactly is the total annual salience of waterproofing, and are you the biggest company right now when it comes to B2C waterproofing?
We got into the waterproofing zone because of the fact that we felt that customers were blaming everything on the paint, literally, and they did not know the knowledge of the substrate, which is so very critical in today's brick and mortar model which is there in India in terms of making homes. We've been now into waterproofing for the last about almost 8 years, and the journey has been explosive. You know, we now are the #1 player in terms of the retail market. We've taken the whole positioning of being a lighthouse brand in terms of what we call as the smart care, which is there. And we look at really providing solutions to the customer and taking the mantle of saying that you are the expert in waterproofing.
With the kind of balance sheet that you have, with the kind of brand power that you have, I'm sure there will be a lot more bigger inorganic opportunities in the home decor space.
Absolutely. So as we are looking at going ahead, we are looking at offering almost everything which really goes into a home to that extent. And as I speak, we've got into lighting, we've got into UPVC doors and windows, we've got into wooden flooring, kitchen and bath is already with us, we've got into fabrics and furnishings as I look at it. And therefore, as we kind of go ahead, we are always on the lookout in terms of saying that is there something which really synergizes in terms of our strategy, in terms of making it big to that extent.
In 3 or 4 years from now, if I had to look at your revenue mix, how much would come from the decorative paint? Of course, a large chunk would be there, but you have 8 to 10% coming in from home decor. You have industrial, you have international. Any other areas that you're seeding? I mean, how does the revenue mix of Asian Paints look?
So as I see it today, global is close to about 8 to 10% of our overall category. Industrial is about 4 to 5%, and we think that industrial would kind of really grow to about 7 to 8% in terms of going ahead to that extent. Decor is the other one in terms of which keeps on growing. And if you look at all the adjacencies which are there, you know, whether it is the whole area of waterproofing or it is the area of textures which we have kind of bought in, which is there. But I think one area which would be an outlier in everything would be the whole area of the whole service brand.
Yes, okay. 650 cities is where you're at right now.
Yeah, so I think that's something which has been my personal kind of passion in a very strong way, because I think worldwide there was a challenge. You know, when I used to speak to international paint companies, people used to say, you know, service is not something which this industry is made for.
Numbers, joy and happiness is okay. Stock market wants numbers.
The number is 650 cities as we see it, okay.
Revenue?
In terms of revenue, we can't kind of reveal the revenue in terms of what is it. But I can tell you that our endeavor is that the service brand should become almost 10% of the overall revenue of Asian Paints as we kind of go ahead.
Next decade, the last decade, you've grown sales at little around low teens. Profits have grown around mid-teens. Your stock price has grown at around 20%. The next decade, with all the opportunities that you're seeing, you foresee that to continue?
I don't think so. We should just look at the year which has kind of gone by. But I think the journey forward is still very, very strong in terms of what I see. And as we kind of go ahead, and look at the next kind of decade, I think as an organization, we would kind of look at numbers which could be closer to about anywhere between 11 and 12 billion in terms of going ahead to that extent. And it's not coming only from paints and coatings, it's coming from all the categories we have created, the industrial sales as I spoke of, the home decor, the global business and so on and so forth. So I think it's going to be a combination of all this in terms of what we see. And given the fact that India is a very strong market for us and the kind of growth which we envisage of the GDP going forward, I think this should be a reality.
So I got my headline. I mean, over the next decade, looking at a 1 lakh crore top line for Asian Paints. You've also gone on this big capex spree, which is part of it backward integration, part of it building more capacity. In terms of products, 12% of your new revenue comes in from new innovative products. Promotions, you have said that you will increase your ad spends going forward. What does that mean in terms of quantitative benefits in terms of margins, revenue, incremental, reach that you have? Give me numbers.
So, as I said, the area of new product and innovation, we have kind of done almost about 300 new products in the last about 7 years now, and they will continue to contribute to about 12 to 13% of our top line in terms of going forward. I think that is something which is a very, very strong source in terms of what we are bringing onto the table. We have looked at a lot of backward integration in terms of creating, capacities for something which possibly no competitor has done to that extent. So whether it is things like opacifiers, additives, and so on and so forth, which are a big sum of our raw material buy, I think all these will definitely add to about 1.5% of our overall margins going up as we kind of look at future. The third area, I think we are looking at bringing more and more automation into the game in terms of how we can look at being the best CPT across the organizations, and looking at therefore bringing our overall area of overheads to an improvement of about 1 or 2% of the total overall sales in terms of what we do to that extent. And finally, the area of brand equity, where we feel that today we would like to kind of have a market share of or a mind share of more than 85% in terms of going forward to that extent, so that we can look at influencing not only the bottom of the pyramid, but look at influencing the luxury space in the India, as we see more disposable incomes happening, more affluent families happening to that extent in terms of going forward.
Would you let that flow into your margins, or your margins will still remain in that 18 to 20% band, and the remainder goes into brand building, like you said?
So we would largely say that we would kind of retain the same band, okay, and look at really investing these into core areas of the organization, which will always keep it leaping ahead.
Which is your favorite Asian Paints ad?
One which I'm very fond of is what I literally created along with Ogilvy, was the Har Ghar. Okay, Har Ghar with Piyush's magic and his voice still remains one of the most remembered ads, and I think it's propelling the brand really very strongly, because Har Ghar Kuch Kehta Hai is the core of Asian Paints.
All right, a wholesome discussion there with Asian Paints. You can catch excerpts of that conversation all day today on CNBC-TV18. But in the market, I just wanted to point out that there is a big sell-off in the broader markets. The mid-caps are under a lot of pressure. Almost 900 points gone on the mid-cap index straight off the back. And all PSUs, we were telling you a while back that, PSUs is some money being taken off the table. Almost all PSUs are seeing some selling pressure right now. So just keep an eye out on that. But cement stocks are also in focus, Nigel?
Well, that's right. Ramco Cement, that's the one in focus. That's taken a bit of a knock. The reason is that the operational performance was weaker than expected. The sales volume, in fact, came in at around 4 million tons. We were working with a number of around 4.2 million tons. And the EBITDA number as well was a miss of close to around 10 to around 12% in comparison to our poll. Besides that, they went ahead and they've announced a capex plan of around 1,700 crores. They're already sitting on a debt of close to around, of around 5,000 crores odd. So because of that, the street is a little bit nervous that the operational performance is a little bit weak. Debt continues to remain elevated. And also they've gone ahead and announced a capex plan. Explains why the stock is under pressure.
All right. Well, let's do one thing. Let's also talk about Cummins India. It was a very strong quarter for the company. Highest quarterly revenues and profits based on robust domestic demand. The stock, in fact, shot up after the numbers as well. Their domestic sales are up 36%. Ashwath Ram, who's the managing director of Cummins India, joins us now to talk about that. Mr. Ram, thanks a lot for joining in. It was a very good, growth that you saw in this quarter, and I understand that you continue to hold on to this double-digit revenue growth guidance for the full year. But can you tell us how has demand been across your segments, and what do you see as the big trigger for the company going ahead?
So demand has been very robust, especially domestically. And the demand has been very strong in our power generation business, especially in areas like data centers, residential realty, commercial realty, manufacturing, and infrastructure. We believe this will continue till India continues to build its infrastructure out and continues to make investments in building roads, bridges, ports. Just the whole infrastructure play is very positive from a Cummins perspective.
So when you say that demand continues to be very strong, right? In this quarter, your domestic growth was 36%. Do you think this is something that you can replicate in Q4 as well as in the first half of FY25?
The growth has been, like I said, it has been strong, mainly driven by the infrastructure spend. It depends on whether the spend continues. We have elections coming up, so there is likelihood that there is some tapering of spend there. Also, road construction, which was very, very strong in the previous quarter. We expect to see a little bit of softening in those spaces. But when we look at it from a medium to long-term perspective, I think this kind of growth can continue.
Private capital expenditure. Morning, sir. Prashant here. Private capital expenditure needs to pick up now, right? The government has done the heavy lifting and, they're taking a bit of a backseat now, and rightfully so maybe. Just a quick comment on margins for you. You'd guided for a 100 basis point improvement in margins. Are you on track, or do you think with commodity prices starting to harden at the margin a little bit, there could be downside risk to that?
We guided that we would grow 100 basis point year on year, and so far we have stayed ahead of that. As a matter of fact, we have grown a little over 250 basis points. We did get the trifecta of advantages this year and in this quarter as well, in that the commodity prices continued to remain soft. The price increases that we had taken in previous quarters, we continued to hold on them. And the third is that the cost reduction actions that we have been constantly pursuing continue to yield us benefit. Now, moving forward, not all of these variables are going to remain positive all the time. So there will be more pressure on margins, but it is management's endeavor to continue to keep striving to grow the margins year on year.
So what could be, where do you see sort of margin settling at? Broadly, without being very specific.
See, in this kind of business,
FY25. Yeah.
Yes, see, this kind of business is very, very competitive, and we already have a differential margin as compared to our main competitors in this area. And I think we are going to be able to maintain the differential. So we think that the margins we have achieved now are some of the best that are achievable in this kind of business. So we expect to hold or maybe do a little bit better, but it's not going to be as straightforward to get the kind of growth in margins that we've gotten for the last year or two.
Your distribution business has grown very well too. It's up almost 26% in the first half of FY24. How was it in the quarter gone by, and what is the expectation? I mean, what kind of growth are you seeing there?
Yeah, so the biggest growth has been from the domestic market. As a matter of fact, our export markets have dropped significantly. They have dropped as much as 40% in some markets. So when you look at the global market, pretty much all the big markets, Europe, Middle East and Asia, Asia Pacific, Latin America, all those markets this year for us in power generation have dropped up to 35-40%. And despite that, we've had growth mainly because we have been helped by the domestic markets all across. So whether it be power generation, whether it be defense, whether it be construction, mining, compressor, all the markets that we play in India have been firing all cylinders. And that's why we've been able to offset the slowdown in exports and still have pretty strong growth.
Have exports bottomed out, sir?
We think so. It's difficult to predict, but we think it's bottomed out. When we look at the outlook, it looks like some markets are beginning to come back because they're coming back from a very low base. So these are early indications, but it looks like we've bottomed out.
So for F5, I mean, would you want to hazard in the ballpark some guidance there on the export side, or too tough?
It's very, very tough. And every time I go to hazard a guess like this, then some new crisis crops up. Like right now, we are facing the Red Sea crisis, which is causing us to get raw materials are delayed by 2 to 4 weeks, and our shipments going out are delayed 2 to 4 weeks. So it's a little difficult to predict from a quarterly basis. But when we are looking at it from a medium to long-term perspective, that market also we see having positive growth for us. We have launched many new products. We are attempting to enter other markets. We have new products which we developed in India for CPCB4 Plus, which can be sold in other markets around the world. So the medium to long-term outlook, even on exports, is extremely bullish. And we do have a cost advantage in India for the same products as compared to other markets in the world.
All right, we will let you go on that note. Thank you so much for joining us and speaking to CNBC TV18. Well, that's the word coming in from Cummins. The stock had a big move. By the way, the Midcap index is really under pressure now. 2% knockdown on the index, and clearly there's profit taking that we're seeing. 1,800 stocks on the declining side as we speak. MTNL, RVNL, PFC, SJVN, NHPC. It's a common thread, right? All PSUs are under pressure today. Money is being taken off the table, and huge volumes as well is what you're seeing on the downside.
Sonia, market breadth is completely, and obviously because the 2% cut that you mentioned, right? It's market breadth is 6:1. Now that is large in terms of declines to advances. For every 6 stocks which have fallen, there's 1 stock which is up. This is what's up on your screen. Maybe we can just put some of these intradays up, right? Very quickly. I think NHPC and PFC, of course, Sonia mentioned. NHPC is down 8, PFC is down 9. Both IOC is down 6%, 6.5% on IOC. Oil marketing as a trade, right? BPCL and HP we should also put up and do a quick check, because this is where a lot of people have crowded into, because momentum has been very fast. Money was being made very fast. Small pullbacks relative to the gains we've had. BP is down 3, HP is down about 4.5 as well. RVNL is down 9% now. SJVN is down about 9%. Paytm I mentioned right at the word go. It's down 7.5% on Paytm, 413. There is Escorts, which started 3.5 lower. It's down a full 8% now. 2,700 on Escorts coming through. There is a New India Assurance, which started up 4%. It's down 6, so which means from the highs it's down 10, actually over 10% now. 286 on New India Assurance, NIACL. If you want to look at the code, Ramco is down about 6%, and names like Hoodco, Rights, GICRE, all down between 5 and 6% or so. We'll take a quick commercial break here. Nagaraj Shetty will be with us, technical research analyst at HDFC Securities. We discuss trades with him in just a bit. Stay with us.
Okay, it's a tale of two cities actually. The headline index is absolutely flat, but the mid-caps are under pressure. Nagaraj Shetty, the technical research analyst at HDFC Securities, is with us. Nagaraj, hi, good morning. What are you making of the kind of sell-off we're seeing in the broader markets? What does one do now, and what's the way forward?
Hi, good morning. Market has been showing a high volatility at the higher levels, and today in the last 2 sessions we have seen selling pressure emerging from the higher levels. If you look at the chart of the Nifty has been moving up continuously, one day up and one day down with kind of a choppy moment. I'm not expecting a bigger kind of a reversal from here. Even though market declines from here, around 21,500 is going to be a strong support for the market. I'm expecting buying to emerge from the lower levels. For the index, any dips is going to be a buy and dips opportunity. To discuss about the broader market, we have seen some phenomenal up move in the broader market. And if you look at the mid-cap and small-cap charts, they have moved up clearly, and in between they have consolidated in between and showed minor decline, and the trend remains positive. In the last 2 sessions, though, broader market has shown some kind of selling pressure from the higher levels. I'm not expecting any big decline from here. So this is going to be a buy and dips opportunity for broader market as well.
All right, Nagaraj, we'll leave it there, but more coming up with the... All right, I think we have to get your picks. So what are the trades? All on the long side then?
Yeah, of course, I'm expecting buy and dips opportunity as I have 2 picks. First one is the HEG. If you look at the chart of HEG, though it has declined a couple of % in today's session, the weekly chart is clearly indicating an attempt of upside breakout. We have seen some sharp up move during this week, and the stock price is currently making an attempt to move above the crucial overhead resistance of around 1910, 1920 levels, which is a strong set of resistance. Currently trading around 1902, one can look to buy. 2000 is going to be the immediate target for the stocks, and one can place a stop loss at 1840 levels. And the second one is Tata Communications. Tata Communication, after showing a consolidation moment, it has moved up yesterday and currently showing some good traction on the upper side. I'm expecting this upside momentum to continue for the near term. Currently trading around 1750. One can look to buy around this level. Around 1840, 1845 is going to be the next target, and 1690 is going to be the stop loss.
All right, thanks a lot for that. Let's take a short break on that note. On the other side, our special segment, it's the economy. We'll connect with Suyash Chaudhary of Bandhan MF and Sonal Verma of Nomura India to decode RBI's monetary policy. Stay tuned.